So Tesla stock is hanging by a thread on the 200-day moving average, and in this video I want to go ahead and talk about how we're likely to see some more pain for Tesla stock, and I want to go ahead and break down the exact reason why. See, in my last video, my most recent video, I mentioned how Tesla stock was likely to fall downwards, and I broke down the fundamental reasons why we were going to see some pain for Tesla. Now, when I made that video, I had a bunch of people send me emails saying, Justin, you're wrong. There's going to be this gap fill and Tesla's going to go back up to hitting new all-time highs. And indeed, we did see that gap fill, but we got rejected exactly at the area that I said we were going to get rejected. And now in this video, I want to go ahead and talk about why, aside from the fundamentals, we're likely to see some more pain for Tesla. Now, recently we had the job data come out, and we saw that the United States added a measly 73,000 jobs in July, and the unemployment rate rose to 4.2%, showing that the labor market is eroding.
This is bad.
And when we take a look at the data, pretty much all sectors of the economy are having job losses aside from education/health and financials. But in other words, it's looking pretty bad out there. So this is not the time to go ahead and switch into a completely different career path unless you were going into, the world of finance or healthcare, which, by the way, quick plug, if you're wanting to learn how to analyze a company like a pro, then make sure to check out the Financial Modeling and Valuation Analyst certificate that's offered by the Corporate Finance Institute, as it can literally take you from having no clue in what to do in Excel to becoming an expert at financial modeling, since it's going to go through building financial models from scratch, valuing companies and analyzing financial statements all through a super structured format. Plus, having the FMVA certificate on your resume is going to help you stand out, especially if you're trying to break into a career in finance, as a lot of professionals at firms like Deloitte, Morgan Stanley, and Goldman Sachs have all taken CFI courses. But of course, if you're not trying to break into finance, the knowledge alone is really good if you're just trying to be an independent investor. But with that said, if you're interested, make sure to check out one of the links down below to gain access to all the certificates that you can earn with the Corporate Finance Institute. But we need to talk about something extremely serious, and that's the fact that we're now extremely likely to get the rate cuts in September, as I originally called out, especially for those that are, insiders within Push and Profit Research. I said that, look, September is when we're likely to get those rate cuts. And now, according to the future markets, they are pricing in an 80% chance that we get the cuts in September due to the horrendous job data, right? So Tesla stock going to Mars, probably not going to happen. Probably not going to happen. Now, I know the idea is like, okay, well, rate cuts are going to go ahead and stimulate the market, right? But in this instance, it's not, the Federal Reserve printing money over here to stimulate a booming market. It's really them trying to stimulate a market that is cracking, right? Because, historically, traditionally, when we get those rate cuts, it's kind of because it's a bad time. Now, afterwards, yeah, things look great. But as we start getting to those rate cuts, it starts to get pretty bearish for the market. And that's why the S&P 500 is starting to fall down as well. Now, we have President Trump crashing out on Truth Social with this post saying, Jerome Too Late Powell, I love that name, by the way, a stubborn moron, more substantially lower interest rates now. If he continues to refuse, the board should assume control and do what everyone knows has to be done. And so, we talked about this dissent, especially for those that are insiders within Push and Profit Research, how there's this massive dissent within the Federal Reserve itself. And part of it could be due to just political affiliations or just disagreements. Regardless, what we see is that many members are disagreeing with Jerome Powell holding steady. And a lot of people are pounding on the table saying, look, we need to cut rates now before we get into a horrible economic environment, because, unemployment could spike up significantly and pretty quickly, right? So, that's not a good sign, because of course that ends up bleeding to corporate profits. We talk about the fundamentals on this channel. I know we like to break down the charts. From what I see on this channel, it looks like you guys prefer when I talk more about technical analysis rather than fundamental analysis. I don't know. I don't know if it's just because fundamental analysis is boring. I think fundamental analysis is what really drives a stock up, although stocks can deviate from the fundamentals. We see it all the time. But what the data on YouTube says is that you guys like the technicals. But one thing we have to understand is that, look, when we have job cuts, right, and we have unemployment start spiking up uncontrollably, well, people won't have their jobs. And so therefore, they won't have their paychecks. And so therefore, when they don't have their paychecks, guess what ends up happening? They don't have enough money to buy, let's say, I don't know, a new Tesla vehicle, right? Or even ride on the Tesla robo-taxi, or who knows, maybe even buy a burger at the Tesla diner, right? Because when you lose your job, you're gonna do whatever you can to go ahead and save your, money, right? You're gonna do whatever you can. And so you're not gonna be buying and consuming. And then of course, when you add in the whole layer of tariffs likely to be longer and higher, well, that's not a good sign. Now, in the long term, right, after everything, yeah, there's going to be a lot of great dip buying opportunities. And then after the dip buying opportunities, that's when we have the let's go to Mars, opportunities. But right now, things are looking pretty ugly. Now, real quick, if you haven't done so already, just a friendly reminder to hit that like button, as it really does help out with the channel. And also make sure to hit the subscribe button if you haven't done so already. Now, when we take a look at Tesla, I think the next area that we could potentially see Tesla stock falling down after a few weeks could honestly be as low as the $265 area. Now, am I saying that this is going to happen overnight? Absolutely not. And one of the things that is like my biggest pet peeve is when we have one day of Tesla stock going up maybe 2% and people in the comment section are sending me emails like, Justin, you're wrong. You see Tesla stock went up, it filled up the gap. And I'm like, yeah, what I was talking about was, in a longer duration of time, not just the next day, but the next few weeks and possibly the next few months. But with that said, make sure to watch this video right over here, and I'll see you guys on that next video. Take care, guys.